Tuesday, April 29th. Market analysis, Stan Ehrlich. Good morning. 10:04 California time. We're starting to sink a little bit. In the last couple of days, the market has come back up in the stock market indexes, and that's what I start out with, and then I go to futures, and then I'm tracking three different stocks, Apple, Tesla, and Shell at the moment, but some other subjects occasionally as well, cycles, whatever. So we have come up to a resistance area in the last 3, 4, 5, depending upon the index, last few days, and stalled out in general. Maybe a little under, a little in, or a little around the top. In this case, the S&P E-mini, in my opinion, got to the high of the little resistance area a couple of times yesterday and today, poked its head up, couldn't stay up there, and sank back down into the same range, and has been unable to break out to the upside so far. Closing above, especially substantially above, today's high so far would be considered, in my opinion, the beginning of the next step up, which would probably be up to 5,800. But I don't think that's going to be the case. This market has come back up to a relatively significant resistance area. Look back in time, a lot of trouble in here. Support, a little back and forth. Some evidence in even as far back as, June last year, May. So we can translate those comments to the other indexes in general. This is simply the 1-minute chart on the E-mini. You can see it actually made a minor new high for the day just a little while ago, and then all of a sudden started to break down some. So if we continue to do so and get below the day's low so far, 55.21, then it stands a chance of having some downside breakouts. But we did not get higher than yesterday's high, so there is no bearish engulfing available at this point. And going to the next spider, close to yesterday's high, not higher, sinking a little bit, very similar, of course, identical basically to the E-mini and the 5-minute chart. Look at the QQQ. It also stalled out at almost exactly the same price of yesterday's high, right smack at resistance, and is dipping back down some at the moment. Not too much, but the first breakdown would be pretty much exactly where it stopped just a few minutes ago. So getting below there, then you have a stair-stepping situation below previous lows, and then a new low for the day, and then maybe a new low from below yesterday's low, which would be almost below the day before that, and then maybe some more cascading. I don't know. Sounds like probably new bad news would have to occur or might occur in order to have that happen. That'd be typical. Sounds reasonable. Next, we did not. Well, so we did. On the NASDAQ, we did make a higher high today than yesterday by a slight bit. And it is down on the day a slight bit at the moment. But it could have an outside down day, a bearish engulfing, but we're not overbought, so there's no red sell signal, unfortunately. Like we got up here, like we got here, that didn't work very well. Like we got here, that worked great. This was the top of the rally. I should have a circle around that. Don't know why I didn't do that. Fixed it right now. And, the green ones are buy signals, no buy signal. So I can't get that without the overbought condition also. But a bearish engulfing is certainly indicating that the market should start to dip down somewhat. Doesn't tell you how much, and it doesn't tell you for how long. Next. Well, here we go. Last few rallies since earlier this morning. Couldn't make a new high. Didn't make a new high. Didn't, and all of a sudden, a fairly good break. We really need to see new lows for the day, and of course, in order to have that bearish engulfing below yesterday's low. And the YM is the same story, a little more obviously, because we're clearly above yesterday's high and a new high for the last approximate 2 weeks. But resistance stops it so far, it looks like, and I would not be surprised to see this turn down and have a big bearish engulfing. But it's actually higher on the day at the moment, holding up looks like the best of the indexes at this point. That's the Dow YM. Okay, this is the 1 minute chart. That looks fairly healthy. Even though it made a minor low, it came back right away to make a higher high, and then the lows have been so far higher and higher, and the highs have been higher. I need to see it start to break below 43.24. Next, we've got the Russell. We did not get higher than yesterday's high, came very close. It's still a little higher in the day at the moment, and not quite at a resistance area. So I haven't got a lot to go on here, probably the least, although there is a small gap to close below last week's lows, or the low of the 24th of April. This looks reasonably healthy. Still firm, made a new high for the session, couldn't break into new highs, and didn't make a high higher than yesterday's high. So there's no bearish engulfing available at the moment. It's a doji. Next, we're going to go to bonds. Gaining more ground. This is looking pretty good. Resistance is not stopping the rallies. Also, we're not overbought yet. So there's more elbow room to get up to at least 117.21. I'm thinking 1806. And I'm not going to be surprised, because I'm not sure if it's going to be overbought at the time that it gets to the resistance, that it could get on this one drive up to 1924. And that's almost 3 points higher than we are right now. That would be a pretty good rally, especially if the last day up, taking the next few days, was a very, very strong day. That would be exhaustion strength in resistance and probably overbought. That'd be a great setup. Next, so I'm obviously friendly. Same for notes. Notes doesn't have any particular significant resistance area close by at all. This could be clearly straight up to 1420. Maybe a little bit lower. Let's call it 14 or a little above, which is quite a bit from here, which is close to 13, a whole point plus. Next, we've got crude, and we have a new low. It came up into the resistance area, had one of my bearish engulfings, but that's not mine. It's just a Japanese bearish engulfing. It wasn't my sell signal because it wasn't overbought. If it was overbought, we would have red. Nevertheless, we have another bearish engulfing yesterday, and here we are, a new low ground for the last seven previous days, it looks like. 7. Now, I'm expecting it to move down to these previous lows of 54.50. Now that we have a minor downside breakout, I think we're going to see it continue to drop. We're also pushing away from what was a resistance area because we approached it from below, got into it, got to the top of it, bearish engulfing, couple of sideways, kaboom, down. That was a bullish engulfing the previous day, but it was canceled out immediately by yesterday. Next, heating oil. I see that on the top of the rally, a bearish engulfing, but not overbought, so it's not exactly a sell signal. No violations, didn't make any higher highs. Up in a resistance area also. Now we're making a minor new low for the last 7-8 days or so. And probably a new low close also. I'm looking for a move all the way down to 193.02-ish. Maybe even a bit lower. Fairly quickly. Weak. Next. Natural gas did have a head and shoulder top, did break out, did test the neckline. All of that is textbook technical analysis. Had to move down. I had a false buy signal, and I said at the time I wasn't sure whether that was going to work very well. I didn't want it to, because it would interfere completely with my head and shoulder top story. So it didn't do anything significant the next day or the next day, but then it started to ruin the signal. And yes, it finally got to my minimum downside objective a week ago, a little bit more. That's why I say minimum. And now it's starting to come up some from an oversold condition, but that's about all I got. I think this could rally up a bit more, maybe to 3.9. Okay, that's it. I'm friendly up to about 3.9. Gold, bearish engulfing last Friday. So far, nothing's happening. We rallied back up past the middle of the range of the engulfing ER sell signal, and that's an official sell signal, not because it's overbought on the exact same day, but it was overbought within the allotted number of previous days, and that was about 4 days, 3 days back. So it works to be a good signal, but it's not working, making money yet. It needs to start to close below the low of the bearish engulfing. Then no matter where you sold it on that day, you would be profitable if still holding the short trade, of course. So far, so. Closing above or even getting close, frankly, to the high of the bearish engulfing 2 days ago would probably also stop us out. Now, I'm not showing you where the stops are at the moment, but the fail-safe is no worse than a tick above the high of the bearish engulfing red ER sell signal. Next chart. Bearish engulfing at the top. So far, it hasn't worked its way lower in silver. Significant resistance area. Still seems to be giving it trouble. Not quite sure yet. I think it's rolling over, mostly because of the bearish engulfing and resistance. Looking for a bit of a break here, but if we start to get below all of a sudden 32.30, then it's going to probably drop off into these other two support areas down here. Next, we got platinum. Doji today, still looking pretty healthy, not overbought yet. I think it could still reach 1033. Yeah, 1030. And maybe even up to 1060. All right, so high-grade copper. Higher high for a couple of days, and then it sank to a little bit lower. No bearish engulfing yet, but that looks like the makings of one potentially. Touching resistance, you see, and then failing miserably so far. And it could easily slip a lot before the close. But we don't have one yet. This looks like, because of the resistance area that it's in, let's pull this to the right a little bit more here. And, well, it came close to overbought, but not quite. But still, I don't give it a high value in my opinion at the moment, but it looks like it's rolling over. If that's going to end up being correct, 4.6 on the downside at least, and these other two support areas stand a good chance of being tested. Next, we've got the soybeans and grains. Beans are backing up a little bit. Yesterday made a new high for the trend up, but a lower close. Today it's dipping off a slight bit. This does not amount to anything important unless it starts to close below 1038. Then I'm kind of expecting another breakdown, maybe all the way to 1008. But that's about it at the maximum. This should be the last shoulder low of a large head and shoulder bottom starting in August of last year to the last shoulder low just this April 7th, 4th and 7th. We've just made 2 days ago a new high for the move up. So this little dip down yesterday and so far today doesn't really do any damage. I think this pattern is still good. I'm still bullish intermediate to long term. The neckline is around 1106. The upside objective is huge at 1240. Next, soybean oil. Yes, 2 days ago, Friday, tested exactly its neckline. I mentioned on that date, last Friday, or I think actually it was Thursday, that if on Friday it would pop up to the neckline, we might have some trouble at that price. It would be a classic spot for it to stop for a moment because it was overbought the previous day already, and maybe pull back down to the support level, which it just did today. Now, we're not going up any at the moment. We're still down a significant amount, but we didn't really break much the support level that held pretty accurately. I would not like to see it close below 49. That would not be good. That would imply that it would sink back some more, which still does not ruin the pattern. The pattern that's big is the double shoulder, head and shoulder bottom. Soybean oil started in February of 24, over a year ago. That has an upside objective of 6260-ish. I think I was nicknaming it 6262. So anyway, we came extremely close, touching the breakout level. And this dip down is not unexpected. Now all I have to do is get that rally. And if I'm right, it's going to be in the next few days. And it'll break out maybe by the end of the week. Today's Tuesday. And we might be on our way up to a huge bull move. The soybean oil of the grains is the closest to a long-term bullish breakout. Next, we've got, unfortunately, soybean meal, which has made new lows for quite a long time. Just a week or two ago. And so far it's holding, but I have no rallies. I've got no higher highs. I've got nothing to squawk about here for a bullish chart pattern. This doesn't look good. It really has to start closing above 310, I'd say, and then have a correction down that holds, and then starts to make new high again, and then I'd be talking a lot more constructively. Unfortunately, neutral bearish. Now, corn is a little bit different. Corn has already had a bullish head and shoulder bottom formation that worked just fine, and that was ended on January 23. But when we had that double low, a double bottom, back from the low of March 4th to March 28th, and broke out of it to the upside, this little dip we've had today, including the last week or so, is a touch more than I wanted, but it doesn't kill the big pattern. It's still okay as long as they don't get it to come too close. Let's say below 455. That would be in the realm of a triple bottom, which is rare as a snowball and you know where, and it doesn't happen very often. Therefore, it's probably going to make new lows, ruining my head and shoulder bottom story. But as long as it holds a little bit lower and starts to make new highs, back in target for a big, big bottom long term, which would have, if it works correctly, a 641 plus upside objective. Wow. Okay, what about wheat? Like soybean meal, wow, this is leading the way down. This is a new low and likely a new low close since the war 3 years ago, and even earlier than that. That was the high over 3 years ago. And this is the lowest low since then today. Wow. Okay, obviously bearish, except for the fact that we are oversold. Modestly, but oversold. Therefore, a rally back up to, I suppose at least 543, but probably 552. And I can't rule out something a little bit higher, but it gets awful mushy in this area. I don't know. This is stretching it way too much, probably 580, but 5, 20, 30, 40, something like that, and then we'll see. Next, we've got cattle. Overbought now for the second day in a row. And this is a condition dealing with the break of an old bearish resistance line that didn't hold at all yesterday, getting above it, staying above it, closing near its high, getting some more upside follow-through today. So far, that line hasn't been broken. So if we hold at this line, which is very close, and start to make new highs again, this could get very overbought and not stop for a while. And then finally have a correction. But I have to say, 2 days overbought is usually enough. And we'll see if the line holds. That's the important thing for the moment. Bearish engulfing yesterday in hogs. The rally earlier today did get up into approximately the middle of the range of yesterday's bearish engulfing ER sell signal, which is where we go short for ER3. So relatively close to the opening, if not on the opening, which seems likely, we would have sold for ER3 scalp and ER3 overnight. Now, the scalp is probably in progress. We're low and last. And that's great for the ER3 scalp and the overnight getting a good start, of course. Now we're below yesterday's low for the original signal ER bearish engulfing. And it's working. What can I say? Looking for a test of lows at 97.17. Let's call it 97.20. And that having broken, I think, in the next week or two, or sooner than that, I'm looking for a move down to 93.15 and maybe even lower. Next, we've got the first stock shell. backing up a little bit right now, dipping down on the day slightly. Nothing particularly profound here. There's a very big gap to close, remember, between 67 basically and 69.60-ish. I still think there's a very good chance of that. And there's even a little gap in the big gap. That's very unusual. So this is a little bit more powerful. Call it a double black hole, maybe. But anyway, let's see how much of a rally we can get. I would expect at least 68.76 to 69.30 to close the smaller of the two. And what the heck, a little bit more and you're closing both. Next. A little higher high today, came up, tried to close some of this older gap in Apple. Didn't quite do the job at all. Pulling back slightly at the moment, not terrible, not overbought, could dip a little. There are two gaps to close below the market. I'm looking at 194.08 for the lowest gap. Yeah, right about 190. Let's call it 194. And that would be $15.75 or so lower than we are. Well, resistance seems to be stopping. It didn't finish. I think we might be starting a bit dip down here, and we'll see what happens on the dip down. Tesla, Doji inside, slightly lower on the day. Made a new high for the rally, but couldn't hold it. That was yesterday, and dipping a little today. Minor downside correction. Maybe back here there could be a very small gap at around 260. If there is, good. If there isn't, I still think it's a chance it can get back there anyway. And maybe touch this old little trend line here, which is now a bearish support line. Bearish means it's trend is down. Support means we're coming down to it. We're trading above that line at the moment. Okay, back to the E-mini. Up $1.70 or 17, as we say. Getting back up toward the recent highs. This is looking a lot healthier real quick. Just not willing to start to really break down fairly quickly. That's what I wanted. I'm not getting it. Again, I said before, if we start making new highs on a closing basis in particular, there could be another leg up because a lot of these indexes will be clearing resistance. You guys have a great day and profitable trading to you.